Hi there, a very warm welcome to this channel Simply Stocks. And today I'm going to talk about Thirumalai Chemicals. Has the stock reversed completely and whether you should avoid at this surge that the stock is showing? So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about Thirumalai Chemicals, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel. It will help you also ask me questions in greater detail. Once you get the $10 membership, you'll have access to my portfolio, a number of stocks in watch list, more than 70 stocks, and also ask me questions on a daily basis, and also podcasts that I put up every now and then. Today I put up a podcast on a consumer stock that could break out. So I do that every now and then when I see a major surge happening in that is for a short term trade. For detailed market or company talk one on one you need with me, we can discuss that on call. Now about the company. Established in 1973, Thirumalai Chemical produces phthalic anhydride and malic acid. It has presence in more than 34 countries, so it exports to more than 34 countries. It also produces fine chemicals and fumaric acid. Major usage in food, beverage, and product coloring is what the products of Thirumalai Chemical does. So I think it is a direct play to all the food companies, direct play to restaurants, etc., and say any food giant which is unlisted also. If you look at the numbers, and these are Q1 numbers, yes, Q2 numbers have been very good, but that has been the case with many, you can say, chemical companies. But if you look at the Q1 numbers, sales went down by 63%, profits went down by around 178%. There is reasonable debt, and this is what is erring me that there is debt in the company, and interest burden has increased over the last 6 months. Margins have declined. The promoter holding is also low, so there are concerns with this stock rather than just looking at the stock movement that has surged post the Q2 numbers. There are fundamental concerns with respect to lower promoter holding, with respect to declining margins. Maybe competition is increasing, and with respect to debt above all. So in my opinion and personally speaking, I don't like companies with debt, whether it is in any industry, and I avoid those completely. Compared to other companies, other chemical companies in the same sector, Thirumalai is having a little bit more debt. Probably if they can curtail that and then bring in the numbers, then I'll look at it in a different vein. Although the stock has performed really well over the last 2 3 months, but that has to be said with respect to all the companies across the sector, with the Nifty at 13,000, small cap index above 16,500 from around 9,000, 8,000. So even that has doubled. So we will see stocks, every stock going up. So that is not to say that all stocks are very good or all stocks are very bad. So the reasons for the decline, now reasons for the decline in numbers and reasons for the decline in the stock from a 2 3 year perspective, when the stock was extremely high. So compared to that, the stock is already is still down 40% even after that surge, 40 45%. Bad numbers in the Q1, that is one thing, and projected bad numbers for Q1. Yes, Q2 numbers have been really good and the stock is surging because of that, but competition from other firms are increasing. This is not a product in which it has exclusive rights. There are other companies, unlisted players that are making the product. So that is another reason why the stock has underperformed over the years. A global slowdown in the market. So we have seen that across the board there has been GDP contraction, there has been growth slowdown. You say in Europe, in US, in many parts of Africa, South America, and with the shutdown in most parts for the first quarter, we have seen the numbers and the stock declined, and we are now going to witness and probably witnessing shutdown in many parts of the globe on a localized basis, probably for a week or 2 weeks. Now 15 days matter a lot for companies, and that is why I feel that the surge that is currently happening is a good opportunity to exit and probably book profits if you're making money, because I can say that over the next 3 months we could see numbers which would be not quite up to the mark. So probably December, January, and February. So some part of Q3 and some part of Q4, the numbers might not be that great as is expected by the market. So with the Q2 numbers, people are expecting big things from Q3 from all those companies who have put up very good numbers for Q2, and Thirumalai is one of them. Now, if Q3 has a decline comparatively, and which could be a possibility with localized lockdowns globally and in India, we could be staring at a situation where the stock may surge before the fundamentals, and then the decline would come in with the Q3 results probably in February or so. So that is why we have to be careful while getting into all stocks that are surging. High raw material cost is another concern. So we all know that in 2016-17 on the ground, you can say oil was trading at 16-17 dollar per barrel, $20 per barrel. Today it is 40-43 dollar per barrel. So what needs to be done? In my opinion, I would say avoid at the moment. If you want to buy a fresh, don't buy at these levels. Don't buy at these levels in the markets. At least this stock. Let numbers come back for 2-3 quarters. So let the March numbers also come back. Let the stock do its thing. Let the market do its thing till April. I think whatever you're holding, just hold on to it, enjoy the ride, and start booking profits at these levels or slightly higher at 13,000 Nifty. There are talks that the market will not fall, whether the market will fall or not. This is absolutely ridiculous. The market goes up and down, and that is how the movement is always. It is moved in one direction over the last 8 months. That is not to say that the market will not fall. So be very careful investing at these levels. If you are having it, hold it. If your prices are nearby, probably you'll get some profits and you can get it out. Chemical sector has run up a lot over the last 4 or 5 years. From 2016 onwards, it has been going up. I won't be surprised that in a year and a half's time, this all would boil down to a deep correction like we saw in IT and pharma over 3-4 years. So after a 6-7 years surge, so probably 1 year more for all the chemical sector. That is not to say that Thirumalai will do exceptionally well, but I'm saying overall the chemical sector may do well in 2021 as well. But there you will see a lot of distribution, and by the second half of 2021 calendar year, we could be seeing signs of greater decline in the or maturity in the sector, and probably from 2022 onwards we'll see a decline. And that's why I'm not very gung-ho now on the chemical sector, as I'm gung-ho with other sectors that I have always talked about. So this was my video on Thirumalai Chemicals. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.